Welcome to the Collecting Keys Real Estate Investing Podcast with your host, Mike DeHaan and Dan Austin. From wins, losses, horror stories, and tactics for optimizing your business, Mike and Dan take a real, uncensored deep dive into the ins and outs of running a full-time real estate investment and wholesaling business.
What's going on, everybody? Welcome to episode 18 of the Collecting Keys Real Estate Investing Podcast. I'm Mike DeHaan here with my business partner Dan Austin.
Hey,
we had a fun week today, Dan. A true environmental disaster that you've been dealing with.
Gotta call the EPA.
Yeah, it's just like it has sometimes these properties that we get into. It's funny because like it shouldn't be as big of a pain in the ass, but it just seems to be like every little thing with this property has sort of happened. You know, from like we had to issue the foundation, and then we ended up having to do the roof, which we weren't expecting, and now we've had the freaking oil.
Yeah.
What even broke? I don't even know what happened.
Yeah.
All I know is there's oil in there.
Let's get into it. I guess why don't we like step back for a second, just talk about property ownership, landlording, flipping, all the things, because you hear a lot of stuff where it's like ideal state world, right? Like everybody that listens to our podcast kind of gets to hear different sides of our business and good weeks and bad weeks. And that's like the point of the podcast, right? Because it's not all roses. And if you're in the game long enough and you've done enough deals, like you have weeks where it's just like, ooh, that kind of cuts deep. But also the benefit of doing a lot of deals and doing a lot of things is it doesn't feel like it's cutting as deep, because you're like, well, we're producing income in multiple different areas of our business. And that's the point of growing wealth, is to like get it all out there, grow it, and then you can stabilize it as like a larger asset. That's the way I look at it anyways, right? And so started off, I think, the week with realizing a bunch of our materials at our flip had gotten stolen. So that was cool. So that increased our budget there, right? And it was
well, to be fair, that could have easily been avoided. But
it could have been. Everything. Well, like we could get everything that we've done. Everything that happened to us could have been avoided, right? And so yeah, that one was just job site security, right? Lost, a couple $1,000s worth of our finished goods, which is It is what it is. But
and also, who the hell steals doorknobs? It was like doorknobs, like faucets, just dumb stuff.
Over a period
be worried about.
Yeah, and it was over a longer period of time, and that was kind of on me and the contractor not coordinating closely enough to get one of the garage doors replaced, because it was easy to just break in. But we had to do different work to basically make it so we're able to finish the garage door issue, because there's some framing and stuff, and just the project. Anyhow, doesn't matter. My assumption was on some of these items that I was leaving there or getting delivered that they were going to get taken in, but then they had to get taken out because of certain parts of the project. So either way, dumb mistake. So that was fun, figuring out what we had to rebuy and, all that sort of stuff. It's not a huge deal, but you can see how quickly it could be an issue, right? Especially if somebody comes in and vandalizes, and that does happen to people's projects.
Yeah.
Hasn't happened to us yet, but so that was a nice way to open up the week. And then I don't remember which day it was, but got a message from one of our AirBNB guests who is coming in with his wife and two infant kids. And they walked in the front door and couldn't even be in the place because it smelled like, I think he described it as gasoline and something else, propane or something weird like that, right? So
you know what though, that came in. This is how I officially know that we're pros, or at least I am now, because I heard that. I saw that come in on Airbnb. It was like 9:00 at night, and I was like, oh, that sucks. I did not lose a wink of sleep.
Yeah, no, I didn't
lose a wink. We'll figure it out tomorrow. But like back in the day, dude, I would have been so stressed about that. I would have gotten in my car, like driven out there. I was like, fuck, I guess I'll figure it out tomorrow.
Yeah, I did not. I'm with you. I didn't lose any sleep over it. I was kind of frustrated because it's not the first guest issues we've had, but it was just like, okay, cool. And then I was working with our property manager. She's on it, and we were messaging back and forth that evening just to try to coordinate it. And it was like, okay, so what do we got to do? Like, we're gonna pay for this guy's hotel room. We're gonna refund him everything. Like, just trying to make it right for him. I mean, that would suck, right? And so it's our responsibility, I think, to do that as like an Airbnb host, instead of like trying to like cost mitigate, like, okay, what can we get away with here? It's just like, all right, take care of this guy, make sure he's good, and then start canceling reservations or figuring out, which our property manager is great. She runs a bunch of other Airbnbs, and so she was able to offload them to other units that she manages. And we, that actually took a lot of work the last couple days of the week, just trying to organize that so people had a place to stay, especially because some people aren't very responsive and they might just show up to a locked house and they can't get in. So we did that, called the whoever property manager, sent somebody there to take pictures, and I knew exactly what happened, and I just didn't want to believe it. But this has an oil furnace in it, which I wanted to replace. Had the HVAC guy come in there, and Mike and I had the conversation. It was like, if it doesn't need to be replaced, let's not replace it now. So we could have avoided it. We knew it was a risk, right? Kind of sucks.
Freaking Gulf down there, just like
right.
Yeah.
Anyhow, so it flooded. There's a huge 500-gallon oil tanker. I don't know how big it is. It's pretty big. That just basically drained into the newly remodeled basement, carpet, drywall, bathroom. It just flooded it to where the insurance inspector had to go out there. She said she had to wear a gas mask. It was so bad.
Oh, she's a wimp. She's fine.
I know, right? So I still haven't gone there. I have no interest in going there. Like I haven't gone there. We've coordinated to get everybody to do whatever.
Judd went and checked it out, though. He didn't complain about a gas mask. Yeah.
Yeah. No, I'm just making a point that I have no desire to go there and look at it. I know exactly what the problem is, yeah. And so now we're at the point where it's just like, okay, replace the furnace. Well, one of the reasons we didn't want to replace it initially was we got to wait to get gas extended, like natural gas extended there. And then potentially upgrade the electrical panel. So it all adds up to, $15,000, $20,000 worth of labor. But it was something that, I've been kind of thinking we should do because the house actually doesn't have air conditioning. So it would have been a nice time to add that. So now we're faced with that in the middle of the winter with no heat. And the biggest problem is getting it mitigated and working with insurance before some of the pipes burst, because where we're at in our market with no heat in a home, like an old home like that, pipes will burst. We've actually had it happen on our other Airbnb. Actually, it wasn't a burst pipe. It was a frozen drain pipe. So every time the washing machine tried to drain, it would just hit an ice block and flood, right? So we've had a couple of those issues. And so, that was nice, and it's pretty costly. And now it's like, what will insurance cover? What will they not cover? And kind of going through that battle. But, that was fun.
It's such a nice surprise.
It was a nice surprise.
Oh my God, that's always something. Yeah, when you called me to tell me about that, I was on a Zoom with Judd, who's our dispositions manager. He's kind of shifting to like an internal all-around employee, who's doing a bunch of stuff for us. And he has a really strong interest in owning rental properties, and that's literally what we were talking about, was how he wants to buy some properties this year and all this sort of stuff. And you call and you explain this whole thing, and I was like, well, I wasn't expecting to have to spend $17,000 today, but you sure you still want to own properties, Judd? That just sort of happens sometimes.
Exactly.
Yeah.
No, it happens, right? And that goes to where I think you and I are on the same page. Is we are building a rental portfolio as like an asset, and as we're growing it, there's going to be costs to grow it, right? And maybe at the end of the day, when we stop growing our residential single family, small multifamily asset pool, then we really start being concerned about costs and those sorts of things. But right now, while we're growing it, we know that property needs a furnace at some point. So you would normally budget for that, right? But because we're growing and we're accumulating income from different streams, it's okay to have those incidents where you're not sweating it, right? And then at the end of the day, in 5-10 years from now, when we're looking at our P&L for our properties, now it's a different story. But you're also, looking at it from across this asset pool as opposed to one single house that you own. And you're like, oh my God, that just wiped out 3 years of cash flow.
Yeah, exactly. Right. Well, I think that's also why cash flow is kind of one of the overrated things in real estate a little bit. I think it's obviously important because it covers those costs. But at the end of the day, the other parts of real estate, like the appreciation, the debt pay down, tax benefits, those are going to net a significantly larger return than your cash flow on the average property.
Yep. Yeah, and looking at it as an entire asset, just like you would your stock portfolio that maybe you don't touch for 20 years, is you're it's going to go up and down, but you don't sell it because you know it's over time those shares, the numbers of shares are going to grow in value, and then your net worth grows. And so that's kind of the approach we look at it as.
Exactly, yeah. And I think that's also the reason that having that cash flow though is important, because then it at least allows you to not have to come out of pocket when these new expenses do come, if you're wise with that cash flow. Yeah. But I mean, it's funny though, because looking back at the stuff that I bought several years ago, I remember when I first bought like my first duplex stuff, 2018. There was these little things I had to do, and I was like, oh my god, it's gonna make $7,000. Like, I don't even really have this money, and I was so stressed about it. But now this past year, when I did a cash out refinance on that thing for like double what I bought it for, all of a sudden that $7,000 doesn't really matter, like at all.
Yeah. No, you're absolutely right. I mean, and it's not like we're advocating for not having cash flow, because we both are cash flow investors. The cash flow to us isn't just necessarily a living expense, where like if you're purely living off that during a growth, like while we're growing like we are at such a rapid pace, you can kind of, I don't know, it's just doesn't matter to me at this point.
Yeah.
It will at some point maybe, but just not right now, because I'm more concerned with the ability to take that number of units and double in the next 12 to 24 months, as opposed to what this cat does to my cash flow right now.
Yeah, exactly. Well, that brings up an interesting question that I actually haven't even talked to you about yet, so I'm about to put you under the gun here. I know we both have these goals to grow this portfolio over the next year. What are your thoughts on like how interest rates and things like that are going, and how we have to start adjusting offers, and how other investors in general should be adjusting their offers, looking at like doing these BRRRR style properties where you're going to be locking in this longer term hard money. I mean, longer term money at like cheaper rates. But yeah, out of this hard money loans that we typically get to buy with. I mean, one of the challenges we're going to be facing is that rate is going to keep creeping up. It's going to be harder and harder to make things make sense, especially at the current market values.
Yeah, I think you shouldn't be like, if you're planning to BRRRR a property, don't expect that you're going to get the rate that you're forecasting right now. At least when you do your analysis, add a quarter to half a point in there if you can do it within the 6 months. My assumption is everybody, all the players know that the Fed needs to raise rates. And I think finally everybody, like the big dogs, when I say everybody, not just real estate investors, but the banks and everybody are like, okay, yeah, we've scraped enough profits. We've let the government print enough money. There's enough billionaires now through banking and all these other, I think the market's going to react less than it has in past years, which to me means that we're going to start seeing interest rates for investors, even on the commercial side, like in that 5% range, as opposed to where we were, 3.5, 3.9 on some of these commercial loans. We're going to see that, sometime by the end of the year, those are creeping up. I mean, I'm already looking at looking at some cash out refis on conventional loans at like 4.5, 4.65. And so, where a few months ago would have been a solid below 3 or below 4, sorry.
Yeah, well, I mean, I got 3.75 in November on all mine on freaking like duplex and triplex. Like those ones are typically even higher as it sits. Well, so what do you think that's going to affect values? 'Cause that's the other thing that we're also looking at too. This is what I've been thinking about a lot, is how is that going to start to adjust values? Because I think one of the biggest reasons that values have gone up so much is because people can just afford more house when interest rates are so freaking low. Like all of a sudden, when you can buy a $500,000 house for the same payment that your $300,000 house was at 5%, because you're not able to buy at 2.9. That's going to be really interesting to sort of see how that sort of changes everything.
So the typical economic argument goes back to the supply and demand, right? So the government has to control inflation. Like that's not the government, but basically that's how it's controlled. The short-term overnight lending rates, all that stuff that are set by the Federal Reserve, like that is a mechanism for controlling inflation, which goes back to just supply and demand. And so if you reduce demand, supply should naturally reduce. And when we talk about that in real estate, basically if you make it more costly for people to purchase a home, and everybody thinks about it in terms of a monthly payment, right? And so that's where we look at it. So instead of it being $1,200 a month for the average home or whatever it is, it's going to be $1,500, right, for the average mortgage. So $1,500, like that's a big swing. for somebody in home ownership. And so that would likely reduce the demand for houses, which, as we know, in a real estate market, what less demand means lower prices. So in fact, the argument would indicate that you would not be able to sell any houses or properties you're trying to sell for the price you think you're going to get in the short term. And that's scary to think about in like the worst terms, right? Because the value, your value across your portfolio could potentially be reduced by a significant amount.
I guess the argument would be is supply really going to drop that much? Because I imagine there's going to be so many people that have this low rate locked in, especially for like the next 5 to 7 years, who have bought a house in the last year. They now have this $700,000 house that they bought that's at such a low payment compared to what it could be. Like, they're not going to leave. These people aren't going to walk away because they're going to have to be moving down and having a more expensive payment.
I guess the other side of the argument, you're hitting on a great point. The other side of the argument is that there's going to be reduced supply because there's people with 2.75% interest mortgages who would never have been able to afford that house in their lifetime had they actually had a 3 or 4% interest rate. The other part of that argument is that, and a lot of people continue to say this, is that we're underbuilt across the U.S. And so there's still people that need homes, and they're still going to be building homes. But I think the answer is somewhere in between. So you've got the guys who are still bulls on this saying, oh, we're underbuilt. And what you just said, Mike, people won't want to leave their homes because they got this great interest rate and they're not going to be able to afford to step up in the near term. Or the argument of like, oh man, it's all going to come down because interest rates are going up. And that's what we've seen in the past. Interest rates go up, everybody constricts, markets drop, everybody gets scared, nobody does anything. I think it's somewhere in between. Personally, I think we will see some contraction in the demand of things, but I don't think it's going to go completely away. And I think there's still money to be made in the market.
For sure. Yeah. I think one of the biggest changes investors will need to make is you're going to have a better product to be getting those. I think there will be less tolerance for people that are like, I'm willing to settle on this kind of crappy house just because I need to move into something and I want to lock in a $1,200 a month monthly payment for the next 30 years. And I also think that if you do have flips or BRRRRs that are kind of tight, you better hurry up and get those turning because, there's going to be a little bit of risk there compared to past years, I think. As those rates start to go. I think especially on BRRRRs. I think flips, you'll probably be a little bit safer because there's still going to be a large demand for it and people are still going to overpay for stuff just because they need somewhere to live.
Well, even besides that, you can reduce your profit margin on a flip. Say your profit margin was $30,000 on a flip and you sell it for $30,000 less, but most flips are being sold at the median, home and price. So that's a huge percentage to go down. But at least you didn't have to come out of pocket. On a BRRRR, you're not getting your money back, is what that relates to.
Exactly. Yeah, your money gets trapped in there, and then also too, if the rates have gone up, you're potentially going to be getting less cash flow than you were expecting. And that can basically kill the entire deal at that point. Yep. So yeah, either way, I think it's going to be more and more important over the next little bit to make sure you're moving fast and you're supplying as good of a product as you can and be doing less of the janky investor stuff that we've been seeing for the last year and a half.
Which you could get away with, and you and I have gotten away with a few things that you're like, whew, that was good. But it also just makes you, if you're going to be an investor, and this is where I always talk about, it's like, are you an entrepreneur who's in this real estate game to stay? Beyond just investing and parking some of your excess cash flow or your excess cash, because then what you do is you pivot and you look at other ways to increase the cash flow because you thought you're going to get $300 or $400 cash flow. Interest rates go up. You're like, shit, I'm getting no cash flow. What are other ways you can get cash flow out of that same unit? Well, multi-tenant housing is starting to get rent by the room is starting to get big in some markets. Is that going to be more popular? Rent by the room is where I started out as in the student rentals because the cash flow was higher there, and it's easier to pivot those because that's by the room. So your actual dollar amount you're asking for per person is less, but when it gets accumulated up to the entire property, it's higher. So if you get a 6-bedroom house, you can rent that by the room for $800 a room, where before the whole property only rented for $2,400. That's cool. Again, like student housing is is another one you can jump into, or you get creative. We've got some other creative type of options where we rent to the government essentially. That allows us to get higher cash flow on some of our properties. And so like you have all these options out there. You just can't expect that the exact same model is always going to keep working in every single market condition.
Yeah, exactly. And being flexible and yeah, I think being strategic about that. I think where a lot of people are going to get stuck is if they're exactly strictly one thing or another. Like all these people that are so like hard on, I'm only going to do short-term rentals on all these sort of areas, right? And it's like, if that's your only thing and you're overpaying for all these properties, determining the short-term rentals because they cash flow, it's like, well, what happens when, there's sort of shift in the market, you need to offload that and you overpaid for it. And now you can't be exiting without losing money. Like you got to be able to have another strategy there. I was like, or even people who are strictly long-term rental investors. It's like after a while, what happens when the rental rates don't cover the mortgage payment anymore? Which is happening in a lot of markets.
What about rent control, which is always looming, in especially where we're at in Washington?
Yeah, exactly right. So just weird stuff. But yeah, I mean, one of the things that I think will be sort of ever looming as well, which is sort of an unknown, is just going to be this. I don't want to say like conflict, but like the sort of haves and the have-nots in society. As these sort of things go, especially pertaining to properties, as properties get more and more expensive and the buyer pool becomes smaller, and then there's going to be more and more people that are like reasonable people but just can't afford properties anymore. It's like that's when the majority of the population all of a sudden can't be, living the American dream. That's where you got to start worrying about, some sort of political action being taken that may or may not be completely irrational. But that's not something you can predict, but it's always something you got to make sure that you're at least monitoring for. Yeah.
Make sure you're on the right side of that, as in the property owner, as in the wealthy guy.
Exactly right. Yeah, honestly.
Yeah.
But so we got all that going, and then we've been dealing with this new duplex that we just bought. This was like the tenacity of some people. I can't get over this whole situation. It's just so ridiculous.
I forgot about that.
So we bought this duplex, kind of. It's like a single family with an ADU, and the people that lived in it, like the reason they needed to sell to us at an extreme discount was because they had a hard money loan on this property. They had illegally moved into it. The previous, the lender had found out and was like, hey, we're gonna foreclose on you now because you violated the terms of your note, and they needed to liquidate it in a very quick period of time, and we were able to do that for them. So we got them out. They have another house that they've already bought, and they're like, yeah, we're going to move over to that one, which they were supposed to be out beginning of February. It's now February 6th. They're still there. But then they freaking put in a maintenance request because we're renting it back to them all through our system. They put in a maintenance request to have us come fix this stuff in the kitchen. And it's how the hell has that been that way? You've been in the house for 10 years.
She didn't
not
tell
that long.
you?
They've been in the house for 3 years. Yeah, they didn't tell us about all this stuff. And now they're like, oh, well, you're the landlord, so you guys need to come fix the broken sink. It's like, screw you. Get the hell out of the house. But what
it's part of the deal here. We saved your house, and now you want us to fix the sink. It's makes me curious. How long do you plan to stay? Because this is one of the ones where typically we do a lot of rigor around the holdbacks and all that sort of stuff, but we didn't do it on this one, and so they're not as incentivized to leave when we want them to.
Yeah, it's such a weird situation. Well, and then it's so odd too because I've been texting with them. They don't talk on the phone. They only text. I've been texting with them, and then Judd's been texting with them trying to figure out the situation. And they keep doing all this really passive aggressive stuff towards everybody. But then all day yesterday, she was texting me we were best friends, just asking me things about real estate and investing and all this sort of stuff. And I'm complying because I want her to stay friendly and not freaking trash our property before they move out. But I'm just what is
the
whole tenacity
rent
of people? It's just insane.
The whole rent thing, when he was trying to collect rent, it's like, no, it says it's due on the 5th. I'm like, well, the lease says it's due on the 1st. It's late on the 5th. But it's like,
I know.
Why couldn't you just pay it on the 1st? Like,
it's
just such weird shit.
It's just so weird. The definition of people? I think they're like pretty entitled with the whole situation. Like, I don't know why, but they own like quite a few properties themselves, but I don't know, they fancy themselves to be pretty smart, but they're obviously not that smart if they, were like got themselves in a situation.
Well, they're killing it because like when
house at a fat discount.
They're killing it when you told me the other property they own, the one that's adjacent, like part of the Deja Vu complex. I'm like, oh man, I bet we should buy that one from them right next there. Oh boy, the boys would love that.
Yeah, well, it's not only it's that they own that, and then the other property they own is like a retired marijuana farm up north that isn't even like operational, but they bought it with like all the machinery like a few years ago. And I'm like, well, why don't you at least go grow pot then if you're going to buy that? Like, you could make some money. I don't understand.
Probably because I'd imagine it's way harder than you think to grow pot. That'd be my guess. And, like, sell it as, like, a business. You probably have to have, like, armed guards, too, if you're up north. People are weird up there. I mean,
I think in general, because banks won't work with them. I remember watching the thing about that a while back where people were hiring, like, retired SF guys to transfer their unmarked vans worth of cash for their marijuana business because they couldn't do anything with it because no banks would take it.
Yeah, I think they take it now. Like there's some like local non-FDIC type banks. Yeah.
Oh yeah, there's credit unions. I mean, even the credit union that we use, I've seen on their website they have like a new plan for marijuana entrepreneurs on there. So
that's our next venture right there.
Yeah,
we're gonna buy it for an all cash offer.
Yeah. No, I don't want to deal with these people anymore. It's just fascinating to me.
Just want them out because that is a bigger loan for us typically on these properties than we get on most of our properties. So the carrying cost is a lot, and it's just timing of our contract. We're finishing up a flip. We just acquired another flip, and we have a little bit of time in between to squeak this guy out because this one doesn't need a lot of work, the duplex, and so it'd be nice to get that thing done and then just complete. But I can't imagine it'll work that way.
No, they'll drag it out forever. So I don't know. Yep. Either way, like on the plus side, if they're paying rent, it'll at least cover our hold. Which they have to pay rent because if they don't pay rent, we can kick them out, and they don't want that.
Yep.
So
no,
because they're not like, I don't know, really trying to cause problem. Like they're not going to not pay rent. I'm very confident about that.
Yeah.
So anyway, the tenacity of people that you meet in this business is just like never ending. I just can't even like fathom it 90% of the time. And I think that's one of the reasons that makes this whole thing so challenging is, I've talked to so many people that like want to get into this business and like they'll ask about it and like what are the most challenging parts, and everyone thinks it's the marketing and it's like the whole process of like finding the opportunities and all sorts of stuff. That's easy. Honestly, the most challenging part is dealing with the completely irrational nature of the kind of people that you market to in this business. Not saying that they're like necessarily bad people, but they're the kind of people who are facing a city foreclosure because they didn't pay like, a $147 utility bill. Like they 9 years passed and they never paid that, and now they're gonna lose their house because of it. And it's just like it's just challenging. It's just so challenging. I was trying to not like sound belittling towards people like that.
Yeah.
But like, it's just a certain type of individual, and it's hard to work with people like that sometimes.
Yeah. I don't think we've at least in our markets like ever ran across a person where you're like, damn, that was just bad luck. Most of our folks that we're dealing with, it's mostly
occasionally.
Like very rarely where you're like, you did nothing wrong. When you're talking about, you're trying to build this persona for the majority of our sellers and tenants and people we deal with. The reason why you're irrational, I think, towards us is because like they have no control in their life because inaction has created their problem. Most of it is just inaction on their end, which is how they got into trouble. It's not that like they don't work hard, or they don't whatever, and they're in financial distress most times because it's inaction. It's like, well, they're at home all day why aren't you like trying to track this problem down for yourself? Instead, they're not taking action and relying on other people to take action for them. And then they get bitter sometimes.
Yeah, for sure. Ooh, I know one that was just bad luck. That one that we assigned that had the tenants who claimed to have ownership of the property.
Oh yeah, that was a bummer.
That was the super bummer for those people, because the people that we worked with were the children of the owner, and the owner was basically in the process of trying to evict these tenants. And in that period of time, this was all during COVID, he had a really severe stroke, and now the children were like, I don't know what we're supposed to do. These people are like threatening our lives. Like, this is just a crazy situation. That one was just like, you know, a lineup.
So I would say, like,
but the only one I can think of.
I've got a good question for you then. Like, when you're talking about like the most challenging part of the business, obviously there's a lot of challenges, but in the sales cycle, these are the types of people that you're going to be dealing with. Like, so like what is your advice, or like how do you deal with these during the sales cycle? Because like once you get to contract, it's still a pain in the ass to deal with them, and you can still go out of contract. Things can happen, but during that sales cycle, like how do you handle it? Because you can be nice guy or you can be bad guy. There's got to be something in there that works more naturally for people.
Yeah, I mean, and that is a good question, and that's something that we work with our sales guys on a regular basis, is trying to figure that out. Because there's kind of two directions that it can go, and you got to stay in the middle. On one end, you can be too aggressive, and it can kill the deal because they don't trust you. They feel you're too salesy. You know, just like you just come off as an asshole, right? Like people don't want to do business with you. Or you can be too nice, and then what ultimately ends up happening is you get basically friend zoned by the seller, and now they just, you know, they don't want to date you. They don't want to get married anymore. They just want to, you know, be your best friend. And like that has happened with a lot of sellers that we've worked with, especially I think with when we've had people in the crew that aren't like natural hard salespeople. It's very easy for that to happen, especially with older sellers, right? So I think that kind of what you need to do is you need to be firm but fair, and you need to make sure that all of the conversations that you have, you're basically creating like a MINS, like a most important next step with them on every single touch point. So, you know, even if you're calling to check in, you're like really at the root of it, you're like, okay, I'm trying to figure out if they're ready to sign a contract now. If they come out no, then I think what you need to do is schedule with them your next time that you're going to communicate, and figure out what is sort of inhibiting things moving forward, and establish with them over the phone or in person, whatever, how you guys are each going to accomplish that, right? So for example, we have one right now with the people, they have accepted our offer, but they won't sign a contract because they don't know where they're going to go with their 7 kids. And we're like, that's great. You know, so we get on the phone with them, but what we don't want is to become the mosquito in their ear that's saying, how about now, how about now, how about now, how about now? Because eventually they'll tell us to F off. You know, but at the same time, you can't just go, okay, well, just let us know, because what's going to happen is going to kick it down the lane 4 months, and they're going to be like, oh, yeah, I forgot about you. I just signed with one of your competitors because they managed to reach out to me at the exact time we got it figured out. You know, so I think it, like in that sort of situation, and say, okay, so what markets are you looking at? Awesome. Here's what I'm going to do, Mr. and Mrs. Seller. I'm going to go back to my office. I'm going to work at finding you a realtor, maybe get some listing details for you on stuff over there. And I'll get that over, and can we reconvene maybe on Wednesday and just sort of explore some options together? Yeah. Right? So now they know what you're doing, and they are basically in the thought process of, cool, you're here to help me. You're here to work through this process with me. And that way there's always forward momentum going, and you're not stagnant. Because at the end of the day, this business, it's a people business. You know, it's all about people, and it should be people first, and you're solving problems. Whether that's legal problems, that's personal problems, that's financial problems. I mean, we've done stuff like helping people with really difficult tenants that we have fronted money to start the eviction process for. You know, we have covered people's bills or like moving expenses before transactions are closed. We basically just have to write into our contract that that's going to be reimbursed. And if you're going to do anything like that, by the way, make sure that you're paying the vendor and not the individual, because otherwise they could very well take the $1,500 that is supposed to go to U-Haul and they could just run away with it and you'll never see it again. So we do that, or like, even some of the more personal stuff that I guess we help you with, like helping people move, helping people find new homes, like doing anything, right? Like driven people to closing, to and from closing, like worked on like helping them getting documents signed, or like going to the county and getting like deeds claimed over, stuff like that. At the end of the day, if you can solve those problems, that is going to be what gets you deals in this. Very rarely are you going to find someone that has a motivation that is just like, cool, this is clean, I'm just going to sign this contract, here you go, thanks so much for buying my house at 70 cents on the dollar.
Right. That doesn't happen very often, but when it does, it's cool. But a lot of times it's the work you got to put in for it. Like you're not going to get a $15,000, $20,000, $30,000, $40,000 wholesale for free. Like you got to do some work. You do have to help these people out. And what's $500 for a moving truck and having a couple guys show up to help them pack it? Like, big deal. Or finding an apartment that they can get into, because the grand scheme of things, like we are investors, we are kind of tied into kind of the market, and we understand how that stuff works, and so we can help them much, just a lot easier than they can help themselves a lot of times. Because we know all the details of these transactions, because this is a once-in-a-lifetime transaction for them. This is the once-in-this-week transaction for us. Exactly, right? And I think that's a very good point, too, is it's easy to take for granted how big of a decision it is for people when you're doing, several dozen of these a year. We did almost 50 last year. When you do like a weekly transaction, it's easy to forget that the person that bought their house 14 years ago that now is in a really like terrible situation, that's a big deal for them to be, making that move again. So anyway, so I guess long story short, when you're doing these negotiations with people, make sure that you're very intentional about what the next step is and the intention of every single conversation, in a way that is firm but fair. So cool. I like it. I think that's a good time there, Dan. Thanks for listening, everybody. You should follow us on Instagram. I am at Mike_invests. Dan is at InvestormanDan. You can follow the podcast at Collecting Keys Podcast. If you go to our website, collectingkeyspodcast.com, you can get our 5-step process to start generating off-market leads. You should definitely go check that out. And we have some pretty big stuff coming underway, where you could potentially have the opportunity to work with us and learn our system. More details will be coming up on that this next week on the podcast. But if you want some more information in the meantime, you want to be on the list, also go to collectingkeyspodcast.com and just put in your email to grab that guide. You'll get the guide, and you'll be one of the first people to know. And yeah, I'm excited for that, Dan. It's going to be a fun endeavor that I think a lot of people will be able to get a lot from. So yeah, I'm pumped. It's going to be fun. It's going to be good. Cool. It's going to be good for everybody. Exactly. Right on. Well, thanks so much, everybody. Have a good week. See ya.
Thanks for listening. Please leave us a review on iTunes or wherever you get your podcasts. And check us out at collectingkeyspodcast.com for tips and guides on starting your own real estate investment and wholesaling business.